New warning signs are out showing that U.S. tariffs are finally hitting home. Companies across multiple sectors say rising import costs and shrinking margins could force them to cut jobs or freeze hiring heading into 2026. It's a potential economic whiplash from a policy meant to boost American workers. We want to bring in friend of the show, financial expert Andrew Poulos, to break down what this means for businesses and families. Andrew, good to see you.
Joe, good morning. Good to see you. So, what this means is we're seeing more layoffs than we expect. And some folks are expecting 2026 to be a little bit tougher than 2025. But time will tell what's going to happen as we go into the new year.
We didn't have numbers for a while during the federal government shutdown, Andrew, but when you look at the data now, we're getting a closer look. How significant is this delayed tariff impact now on business operations?
Yeah, I mean, it's definitely significant, Joe. I mean, we're looking at, numbers that we missed in October, where we headed. I mean, we saw Amazon lay off about 30,000 folks in October, and probably more to come from other big corporations. The big thing that's of concern is small businesses, basically, at this point, and we're starting to see that they're not hiring, and they're sort of tapering off and being very cautious. A lot of it may be due to tariffs.
Yeah, you touched on it there. Are we talking isolated industries, in particular tech sector, healthcare, manufacturing, or could this ripple out across the broader economy?
Yeah, I mean, it certainly can. I think one of the things that could help, hopefully, in 2026 is if we see interest rates come down. Once we get probably into February, March, and we get a new Fed chair, it's very likely that the Trump administration is going to begin to cut rates. Maybe that will help offset some of the possible recessionary factors that we're seeing right now. But, again, that's all speculation, and time will tell what's going to happen. But I think until small businesses get comfortable that we're really not in a recession.
Yeah, Andrew, so a lot of companies right now, they're saying they are reevaluating headcount for next year amid all of this financial turmoil. What are the triggers necessarily that could push a business to reduce staff or freeze hiring?
Yeah, I mean, it's certainly going to, we'll see how it plays out, but I think they're basically just on a slow path, and they're going to basically just take their time and slow walk things to see pretty much if it warrants them to start hiring. But I don't think anything like that's probably going to happen until the latter part of 2026, maybe in the summertime, once we see what happens with the interest rates. I think that's what a lot of people are waiting for.
Yeah, Andrew, we're talking big picture here, but we're talking layoffs here. These are folks' livelihoods, their families here. How do you expect that the ripple effect from, massive layoffs may have, not just on the economy here, but, people's personal lives?
Well, listen, if you're someone who's getting laid off, I mean, it's challenging, right? Where do you come up with money to support your household? If you have a mortgage, if you have rent, those are serious concerns and serious issues pretty much. So I think that we're going to have, some difficult times, not just here in Georgia, but across the country as people begin to get laid off. I mean, we've seen time and time again this year where people have been laid off. They've been looking for a job for, 3, 6, 9 months, and they're still to find anything that they can get. And they're really not looking at anything specific. They're just looking for a job to make ends meet. So that's concerning. I think we're going to probably potentially see more of that as we go along.
That is interesting to note, Andrew, because you mentioned earlier the new Fed chair who will take office after Chair Powell leaves next May. They've got that dual mandate there of lowering inflation or keeping inflation in check, but also the labor market. Is this something that you feel one may outweigh the other heading into next year, and how does that really impact the job market?
I mean, it's going to be interesting, first of all, to see who the new Fed chair is going to be, right? We know that we have a new Fed chair coming in. I can almost certainly tell you that we're probably going to see some aggressive rate cuts because that's what the Trump administration wants. But as far as hiring and what's going to happen, that's just going to be key to see what really happens. I'm very hesitant to say that we're going to have just a robust hiring spree or robust hiring growth in 2026 when we're starting to see over 1.1 million layoffs this year. So I think we should plan for some sort of slow growth 26. Maybe that some of these tax cuts that we're also going to start seeing for 26 will kick in a little bit more than we're expecting, and that sort of will counterbalance some of the layoffs that we're seeing. But this is all kind of very fluid right now because we've got so many moving parts economically as we speak.
Yeah, a couple of months away now from tax season. Financial expert Andrew Poulos, thanks so much for joining us.